Alright folks, welcome back to Boss Economics World, the only channel that tells you what the pinstripe suits in the city are actually thinking, not what the politicians in Westminster want you to hear. Today, we're taking a trip to drizzly Liverpool, circa September 2025. It's Labour Party conference time, and the mood isn't the triumphant festival of hope it was last year. Oh no. It smells of stale coffee, desperation, and the faint, acrid scent of burning fiscal credibility. Our protagonist in this Greek tragedy is Chancellor of the Exchequer, Rachel Reeves. Just over a year ago, she was the conquering hero, the woman who would finally bring sound money and competence back to number 11, Downing Street after the, let's call it the pyrotechnic interlude of the late-stage Conservative government. Remember the Liz Truss mini-budget? The one that turned the UK bond market into a real-time stress test administered by a toddler with a lit match? Reeves promised to be the anti-Truss. The grown-up. The Iron Chancellor 2.0. She assured the bond markets, those faceless, omnipotent vigilantes who actually run this country, that she would be their best friend. She'd balance the books, obey the fiscal rules, and never, ever spook the horses. And for a while, the markets believed her. They gave her their blessing. But now, she's facing a far more dangerous and unpredictable opponent, her own party. And behind them, the snarling, populist hydra that is Nigel Farage Reform UK. This isn't just a political spat. This is the raw, exposed nerve of modern British economics. It's a story of a nation trapped in a gilt-edged cage of its own making, rattling the bars while the zookeepers in the bond market watch on, ready to tranquilize it with interest rate hikes at the first sign of trouble. So, let's break it down, from the surface-level political drama to the deep, tectonic cracks in the UK's economic foundation. Let's start with the most immediate problem, the one that keeps the Chancellor awake at night, the cost of borrowing. The text tells us the UK's 10-year gilt yield is hovering around 4.75%. Let's put that in context, because a number without comparison is just a number. As of this morning, September 29, 2025, the equivalent German 10-year bond is yielding around 2.8%. The US 10-year Treasury is at 4.2%. This means the UK is paying a significant premium to borrow money compared to its peers. This isn't just an inconvenience, it's a crippling tax on the entire economy. Why? 2 words, credibility deficit. The ghost of the 2022 mini-budget still haunts the UK Treasury. That event, where a chancellor announced the largest unfunded tax cuts in 50 years, didn't just cause a market panic. It fundamentally repriced UK risk. It taught global investors a lesson: British political institutions, once seen as a gold standard of stability, could be hijacked by ideological fantasy. The markets now demand a permanent Moron premium on UK debt. They are constantly watching, waiting for any sign of a relapse. This is Rachel Reeves's reality. She is governing in the shadow of her predecessor's catastrophic failure. When Andy Burnham, a potential leadership rival, says the government shouldn't be so hot to the bond markets, he fundamentally misunderstands the game. It's like a parolee telling his probation officer he shouldn't have to check in so often. The markets are the probation officer, and the UK is on a very, very short leash. This high borrowing cost creates a vicious feedback loop. Every time gilt yields rise, the government's debt interest payments soar. The Office for Budget Responsibility now projects that UK debt interest payments will exceed the entire education budget for the 2025-26 fiscal year. We're talking over £120 billion spent not on schools, not on hospitals, but on reassuring investors we won't do something stupid again. This directly impacts Reeves's ability to meet her own fiscal rules, forcing her to find more cuts or more taxes, which in turn fuels the political backlash. She is trapped. The very act of trying to appease her party by spending more would trigger the market reaction she fears, making that spending impossible. Welcome to the gilt-edged cage. The door is locked, and the key is held by institutional bond traders in New York, Tokyo, and Singapore. So, the market is nervous. But what are they nervous about? They're looking at the numbers, and the numbers are screaming. The article mentions a £20 billion black hole in the public finances. This isn't monopoly money, it's a chasm that has opened up for 3 core reasons, each one a symptom of a deeper British disease. First, and most importantly, the productivity catastrophe. The OBR has downgraded its productivity estimates. This is the single most damning indictment of the UK economy. It's the engine of long-term growth and rising living standards, and ours has seized up. For over 15 years, UK productivity growth has been abysmal. Since the 2008 financial crisis, it has grown at an average of just 0.5% per year, compared to a pre-crisis average of over 2%. Why? Take your pick. Chronic underinvestment by both public and private sectors. The long tail of Brexit, which, according to the OBR's own analysis, has created permanent friction in trade, reducing investment and dampening export potential, likely knocking a full 4% off the UK's potential GDP. And a persistent skills gap that our education system has failed to address. When the OBR says we've downgraded productivity forecasts, what they're really saying is we officially believe the UK economy is structurally less capable of generating wealth than we previously thought. This means lower than expected tax receipts for the government, forever. That's a huge chunk of the £20 billion hole right there. It's not a temporary blip, it's a re-evaluation of our entire national economic potential. Second, the political incompetence tax. Reeves came to power promising steely competence. Instead, her first year has been marked by politically tenured policy blunders. The aborted move to strip pensioners of winter fuel payments and the failed attempt to curb disability welfare weren't just bad headlines, they had real fiscal consequences. Every policy U-turn blows another hole in the budget. Reversing the welfare cuts, for example, added an estimated £4 to £5 billion per year back onto the spending ledger. This isn't just about the money. It signals to the markets, to businesses, and to the public that the government is weak, reactive, and doesn't have a coherent plan. It's a tax paid for political cowardice. Third, the global headwinds, amplified. The article rightly mentions US President Donald Trump's global tariff war. In a world of resurgent protectionism, an open, service-based economy like the UK is uniquely vulnerable. When the US and China slap tariffs on each other, and the EU responds in kind, global supply chains are disrupted, input costs for British businesses rise, and demand for UK exports falls. While every country faces these headwinds, the UK is like a ship heading into a storm having already jettisoned its lifeboats. Trump's America First policy translates directly into Britain further behind for an economy that relies so heavily on global trade and financial flows. This external shock is simply exacerbating a pre-existing condition. Now, let's climb out of the economic engine room and onto the political deck, where the storm is raging. Reeves isn't just fighting bad numbers, she's fighting a battle for the nation's soul, as her boss Keir Starmer puts it. A soul that is currently being bid for from two completely opposite directions. On the right flank, the siren song of Farage. Nigel Farage's Reform UK is poll-topping for a reason. His economic offer is a masterclass in populist simplicity. He promises tax cuts and more welfare spending. How will it be paid for? Don't worry about the details. He vaguely gestures at cutting waste, stopping immigration, and the magical powers of common sense. This is cakeism on steroids. It's the economic equivalent of a get-rich-quick scheme, and it's incredibly appealing to a population that has seen its real wages stagnate for 15 years and feels let down by the entire political establishment. He is selling a fantasy, the fantasy that there are no hard choices, that Britain's problems are caused by external forces and internal traders, and that a strong leader can fix it all with a wave of a wand. Reeves cannot compete with this on its own terms. Her reality-based message of the public finances are precarious and we must make the sums add up sounds like a joyless lecture compared to Farage's carnival barking. He is exploiting the very real economic pain that the productivity crisis has created, but offering a snake oil cure. On the left flank, the ghosts of labor past. While Farage attacks from the outside, the real daggers are coming from inside the tent. Trade union leaders like Sharon Graham and party grandees like Andy Burnham represent the traditional labor left. They look at the landslide victory and ask, what was the point? Their argument is simple: we didn't win a massive majority to become Treasury-approved accountants. We won to fix a broken Britain. They see Reeves's fiscal rules not as a necessary shield against market chaos, but as a self-imposed ideological straitjacket. They believe that if the government just had the courage to borrow and invest in public services, in green energy, in infrastructure, it would kickstart growth, and the debt would take care of itself. This is the classic Keynesian argument, but it runs headfirst into the post-Truss reality. The market's willingness to fund such a program at affordable rates is simply not there. What the Labour left sees as investment, the bond market sees as unfunded spending commitments, and they will punish the UK for it instantly. Sharon Graham's demand to change the fiscal rules is, in the current climate, akin to asking the market to please ignore the laws of financial gravity. So, what does this all add up to? When you zoom out, you see that Rachel Reeves is not just a chancellor in a tight spot. She is the living embodiment of the United Kingdom's impossible economic trilemma. A country can typically choose two out of the following three things. 1. Fiscal credibility, keeping the bond markets happy with tight fiscal rules, low deficits, and a stable currency. 2. Populist appeal, offering broad-based tax cuts and/or significant spending increases to win over a weary electorate. 3. High-quality public services, funding a modern, effective healthcare, education, and social care system. For decades, the UK managed to fudge its way through, pretending it could have all three. But the low-growth reality post-2008, compounded by Brexit and the Truss debacle, has stripped that delusion away. The choice is now stark. Rachel Reeves is desperately trying to cling to number 1 and number 3, but the black hole means she can't afford number 3 without violating number 1. Her solution? Stealth taxes, like freezing income tax thresholds. This is a policy called fiscal drag, where inflation pushes people into higher tax brackets, raising revenue without announcing a tax hike. It's a politically cowardly but fiscally necessary move that buys her a little room, while infuriating the very people she needs to vote for her. Her pledge to eliminate long-term youth unemployment is a noble, classic labor policy, but it's a micro-solution to a macro-crisis, a teacup of stimulus poured into an ocean of debt. Nigel Farage is promising number 2 and a fantasy version of number 3, while completely ignoring number 1. His plan would likely trigger a market crisis that would make the Truss episode look like a minor tremor, ultimately destroying the public services he claims to champion. The Labour left wants to prioritize number 3, funded by borrowing, which they hope will lead to growth. They are willing to risk number 1, believing the markets will eventually see the wisdom of their investment-led strategy. This is a high-stakes gamble that the UK, with its current reputation, simply cannot afford to take. As Rachel Reeves takes the stage in Liverpool, she's not just giving a speech. She is performing the most dangerous high-wire act in British politics. Below her, the canyon is filled with the snapping jaws of the bond vigilantes, the populist crocodiles of Reform UK, and the hungry wolves of her own party's left wing. Her balancing pole is her reputation for fiscal prudence, but it's being weighed down on one side by a £20 billion black hole and on the other by the demands of a public that has been promised a better future. The wire itself is woven from the flimsy thread of Britain's downgraded productivity forecasts. The safety net has been sold off to pay for past mistakes. This conference speech won't solve Britain's problems. It is merely the next, terrifying step in a journey across a chasm. Reeves is trying to convince everyone that a slow, painful, and deeply unpopular path is the only one that doesn't lead to a catastrophic fall. The tragedy is, she might just be right. This is the gritty reality of modern Britain. A managed decline, constrained by past failures and terrified of the future. Grab your popcorn, folks. And maybe buy some US dollars. This is Boss Economics World. Don't forget to like, subscribe, and hedge your bets.